this video, we're going to take a deep dive into the US dollar and see how it stacks up against some of the other currencies. When you finish this video, head over to the link in the description and join my free trading course. 13 videos there on 10 different topics. That's going to give you a lot of value on how to actually improve your trading and give you a new perspective of the market. Hello everyone and welcome back to the channel. I hope you've had a good week so far. Today we're going to deep dive into the dollar, see why it's going up, how far I expect it to go, the reasons behind all this on a technical and fundamental standpoint, and how this pair actually stacks up right now against some of the other major global currencies. So the first things first, we're looking at the monthly time frame, and basically what we can see here is the start of the pandemic. This is the weakness that came through for the US dollar throughout the pandemic, and then this is the recovery since mid-2021. As we can see, all of the losses of the pandemic have already been recovered, and the market is now trading at new multi-year highs. This leaves us with the question, how can we wipe out the gains so quickly from a global pandemic that really hit the US economy hard? What is it that's actually causing this big surge in price in the US dollar? And how far will it continue? So looking at this from a fundamental perspective, we have one major reason really why the US dollar is going up so much, and that is all of the money that is flowing into the US dollar. There are multiple reasons that money is flowing into the US dollar. The first was, after the economic weakness and the slowdown, the US wanted to raise interest rates to encourage a balancing out of the economy. We just hit 40-year highs in inflation, and by raising interest rates, inflation can actually go down because what it does is actually balance the economy out by, first of all, increasing the cost of borrowing. So people are more inclined to save and not borrow. And second of all, as a kind of follow-on from this, when the interest rates rise, obviously the currency becomes more attractive for outside investors to park their money in. High net worth individuals or third parties from other countries that want to store their money somewhere that's going to give them a high yield, they will obviously want to come to a country that is aggressively raising rates. So the US dollar has actually attracted what we call hot money flows. This is basically offshore money moving into the US dollar as investors park their money there for a higher yield. And as we know, a lot of money coming into a currency is obviously going to reduce supply while demand increases, and that in turn will cause higher pricing. So the hot money flows from the aggressive rise in interest rates is the first factor that brought a lot of money into the US dollar and one of the key reasons why the US dollar is going up. But another is actually now this geopolitical tension going on between Russia and the rest of the world. Russia decided to invade Ukraine. Basically what this does is cause a lot of uncertainty, and the US dollar is a safe haven currency, so therefore it is generally deemed as a safe place to park money compared to some riskier assets like the yen and the pound. In addition to this, economies like the Eurozone and Great Britain get a lot of their energy from Russia in terms of oil and gas. So what this means is they're likely to weaken because of all these uncertainties and because of less imports or totally removed imports from Russia of basic natural powers. So the US is actually in a very good place right now to see the US dollar increasing in value because a lot of money from outside is coming in, and that is obviously therefore showing a big increase in demand, less supply, and therefore the price is going to rise. So from a fundamental perspective, that is why I believe the US dollar is going up. And considering the Federal Reserve plan to continue increasing rates and the geopolitical tensions don't seem to be slowing down anytime soon, I would anticipate the DXY and the US dollar to continue raising aggressively in price as they are right now. So let's now take a look at the chart on the DXY, see what the US dollar is doing and where I expect it to move to next. Here is the US dollar chart, the DXY. This tracks the strength of the US dollar. Basically, if we look at the last month here, we can see that the monthly's gone insane. We've had a massive uprise, taking out the pre-COVID highs, clearing out all of the COVID losses, and actually now trading towards multi-year highs, almost as high or very soon to pass the 2017 highs, which will then make it the highest that price has been since 2002. So the US dollar is obviously performing very well right now for the reasons as stated, but where do I expect it to go next? Now, if we look at the monthly, we can actually see that we do have very extended movement. We may be due some exhaustion or some pullback. This is natural for a market, and I would anticipate that once we sweep above this high here, which is coming in at around 103.8, then we may get some downside. Now, I'm not looking for extended downside, but we do need some exhaustion to kick in. Now, obviously, a market can extend as far as it wants to, and there is no telling that this will definitely reverse, but we are definitely now approaching a point where we could see some temporary, momentary reversals for the US dollar, come a little bit lower, and potentially drive some of those other currencies that are dollar crosses like EURUSD, GBPUSD, to actually gain some steam and actually make a push to the upside, even if it is only brief, before the US dollar continues its action. So once we pass this level, if we do get a pullback, I would then anticipate the US dollar to easily approach the 105 level. So if we go over to the previous price action here, we can see that the 105 level is basically the next major supply zone. And obviously I've marked that with the key level being the 105. So here we are, we have this small distribution cluster before the big sell-off. This is the 105 area that I anticipate the dollar to move into. And I do not think that it's going to stop here. Now we could easily push into that area. Once again, what we need to consider is this could be a reversal point for the market if we do hit it, even if it's only a momentary, maybe a few days, few weeks, few months, maybe a few days or a few weeks of reversal coming into play. I do believe with the fundamentals, this is going to push above the 105 area, push above this distribution area here, and continue on to the upside. Now, if we surpass that, we obviously have clear targets straight through into 106 being the next key level and supply zone. And once we can pass this area, 107.3, we can potentially push a lot further. It is possible the US dollar could continue a dramatic increase towards the likes of 110, potentially even 115, as crazy as that sounds. Because essentially, if we look at the charts, what we can see is a wildly strengthening market and a very open imbalance towards some of these higher points. So pairing the fundamentals and the technicals, it does make sense that we could clear this area out above 110 and actually push all the way towards the 115 area, 117 even towards these highs. Now, things can change. Maybe the geopoliticals will get a little bit less uncertain, and maybe the US Federal Reserve will have to slow down interest rate hikes or completely pause them at some point. There's no telling exactly what the market will do yet. If these things happen, this will obviously decrease the investor confidence in the US dollar. Therefore, the market may reverse a little bit, and we may not see these super high levels met. But for right now, I believe easily 105, potentially then on towards 107 and beyond. And if we can surpass 110, we have a clear run towards 115, potentially even 117 for the US dollar. So this would be an incredible markup for the US dollar and an incredible comeback from the COVID losses that the US dollar saw. And what this could do is actually drive EURUSD and GBPUSD and some of these other major currencies down very, very far, considering the fundamentals and technicals on those as well. So what we'll do now is talk EURUSD and GBPUSD from a fundamental and technical standpoint, and I'll explain to you just what this US dollar strength could do to the pound and to the euro. Now, this may look a little bit confusing, but it's actually not. The orange line here shows the dollar index. The green line shows GBPUSD. The blue line shows EURUSD. So what we're looking at is the correlation between these pairs and how they are negatively correlated. And if we're expecting the DXY to go up, it's quite self-explanatory. We can see here how much the euro and the pound may actually move down against that currency. So here we can see, if we just look from 2015 onwards, we have a pretty direct correlation here with the US dollar moving up. And on the flip side of that, GBPUSD and EURUSD moving down simultaneously. This is that big movement we were looking at on the monthly time frame from mid-2021 onwards. And we can actually see the opposite happening on G and EU, where we have big sell-offs happening from mid-2021 onwards. But if we're expecting this to continue climbing, which fundamentally we are, this could actually continue falling, and we may see some significant downside for GBPUSD and also for EURUSD. Very simple stuff here on the pound, pretty much the direct opposite of the US dollar here. One of the key reasons the pound is falling so much is, well, first of all, we're on the brink of a recession over in the UK. But second of all, basically the reason the pound is losing a lot of value is simply because the pound is seen as a risky asset. So as we said, with the geopolitical tensions going on right now, a lot of money will flow into the dollar because it's a safe haven asset, whereas this is actually classed as a bit of a riskier asset for investors to hold money in. And while they will be raising rates this year, the dollar is already running strong and the rates are being aggressively hiked. So money is flowing out of the pound and into the US dollar, sending this to the ground and sending the dollar to the sky. Where do I anticipate GU could sell into? Well, if you look at the daily time frame, this week has been insanely bearish, as have really the past few months, but this is where it's getting really bad for the pound. I do think the pound could move towards 1.24 very easily. We're only 40 pips away. That's probably going to be met extremely soon. If we surpass that 1.24 area, we can look towards liquidity underneath 1.225 and then underneath 1.2750. So I do believe these levels will be taken out in time as well. And the final point for the pound to fall into could be this large range between 1.19 and 1.14, which is obviously a large demand area, but we are expecting this to pick up some extreme weakness, unless obviously fundamentals do change. So for the meantime, I would remain heavily short on the pound versus the US dollar. Obviously, as mentioned, the dollar is approaching a possible temporary reversal point. This may also correlate with this demand here. Maybe when we hit this demand zone, the pound could build some strength while the dollar falls a little bit. But I wouldn't expect this to be a sustained move to push, all the way back over these highs. I do think this is going to be bearish, at least through these points, 1.2250 and 1.2750, towards this kind of demand zone here. Now, on the topic of the euro, the reason the money's flowing out of this one is simply because of uncertainty based around geopoliticals. So the eurozone gets a lot of its fuel, oil, gas from Russia, right? That's currently not happening, and there is extreme large tensions that maybe this is going to slow down dramatically. That's going to slow down economic growth, but it's also going to damage the currency because investor confidence is low. People don't want to park their money in the euro when there's so much uncertainty, and the euro obviously isn't going to perform well if economic growth slows down, and there's a lot of uncertainty about whether this is a good currency to hold. So money is moving out of the euro and into the US dollar because the US dollar obviously gets their gas and oil, the majority not from Russia as compared to a majority in the eurozone. So therefore, money's flowing out of here. Now, where do I think this could go on the charts? Well, if you've been in my academy, I've been saying since we were around this point that this low is going to be taken out and the market would trade towards these low levels. So now that we've pushed through that 1.06, we can clearly target around 1.03, take out the liquidity under this low, and push to potential parity levels, which is basically where the US dollar and the euro would be directly equal. Now, this would bring us into the 1 mark on the chart, which would essentially mean the euro and the dollar are worth the same amount. This seems crazy, I know, but this has happened before, back in the early 2000s. And with the state of the current global economy, the war, everything going on, crazy things can happen. So I would not write off the potential of the euro falling towards this $1 parity mark. At an extreme push, we could also feel the imbalance and we could flip the other way where the US dollar momentarily or temporarily builds strength higher than the euro. But this is to be seen in the future because we are looking from a monthly basis here. So for now, just keep your eyes on the target here, 1.03, and then we can look potentially beyond to that parity level if things continue as they are now. Once again, we are looking at temporary reversals, so we may actually get some relief for the euro within this area as the DXY approaches that reversal point. But we'll have to see how that goes. Maybe that won't happen. Maybe we will sell off dramatically, or maybe it will. So that was my take on the DXY and where I expect the dollar to go in coming months. What did you think of this? Did this give you value? Is this going to help you in your trading, understanding the true correlations and the fundamentals behind the dollar? If so, please drop a comment below. I hope you enjoyed this video. I hope you learned a thing or two, and I hope this can help you in your future trading.